I've added extra column 6-month performance because we are now in between the half year and full financial year. So obviously looking at the 6-month, 3-month, 1 month and 1 week performance. Not only that, looking also at the full financial year performance so far. Now, the problem with the 1 week performance is you will see a fair bit of noise. Some weeks you'll have one of these portfolios or the benchmarks performing the best, and the next week it's the worst performing. So what we're really looking at, or what I'm looking at here is the performance since the start of the financial year, 6 months, 3 months. Once you get to 1 month, a little bit more noise there, and definitely 1 week and even 1 day, which I will never ever show you 1 day performance, a little bit more noise. What I've done here is I've colored the best performing out of these six in red, the worst performing in orange. So we're looking at the three portfolios I do run, and based off different strategies: quality, small caps, and technical. And the three benchmarks I do use: NDQ, which is the NASDAQ 100 ETF, XSO, which is a small ordinaries ASX, and also the STW, which is the ASX 200. And you'll notice, the first thing you'll probably notice here is there is one of these six that is shaded, the performance is shaded in red for all 5 periods, and that is my technical analysis portfolio. So I use technical analysis to buy and sell stocks, and by far, this is the best performing out of these six, which makes me think perhaps I should be spending more time using technical analysis. In fact, impressive results so far. Full year, or since the start of the financial year, up 37.9%. 6 months, 28.3%. I'll definitely take that. 3 months, 22%. Even the past month, up 9.8%. And a pretty good week, up 2.6%. And that's accounting for the fact on the Friday, my technical portfolio was actually down about 1.5%. So if I actually discard that day, the performance of this portfolio since the start of the financial year was getting close to 40%. The next best performing out of these six has been an NDQ since the start of the financial year, up 20.9. Then we get the small cap portfolio, quality portfolio, STW, and lagging far behind is a small cap ordinaries. But funnily enough, and this is a little bit of a surprise, in the last 3 months, the NDQ is the worst performing out of these six, but slightly, 9.4% compared to the XSO, 9.7%, smalls 9.7%, but significantly trailing my technical analysis portfolio, which is up 22%. So overall, the very fact that my technical analysis portfolio is performing so wonderfully well when I keep making silly mistakes, and these silly mistakes, I won't say they keep on compounding upon itself, but if I stop making silly mistakes, this portfolio could be up about 50%. Yeah, it could be up by 50%, which makes me think further that I should learn a little bit more in regards to technical analysis. Now, my technical analysis is quite simple, and I intentionally made it really simple. I don't like using MACD, RSI, Bollinger Bands, all those sort of things. I keep it really simple, looking for resistance, support, looking for breakouts. Also base it off announcements as well. Also looking at volume. So keep it very simple, in my opinion, and it seems like this strategy is working really well so far. So now let's have a look at all the activity I did during the week. So I only disposed of one company, but I bought a few companies in the past 5 trading days. So let's have a look at those companies I bought during the week. I made one disposal, and that was I actually bought Iris about a week or 2 weeks ago, and then I sold in the last week when it was down 10%. And then as soon as I sold, it rallied. I also sold Mass Group 2 weeks ago, and the share price of that company rallied. That was a mistake. I sold during the day, and I should have just kept on holding. And that should be one rule I'm following. Don't sell immediately. Just wait a little bit of time, because there is potential that the share price, particularly if the share price has dropped during upon the release of a financial announcement, the share price actually could rally even if it's dropped in the first hour or so. That's exactly what happened to Mass Group. So I'm disappointed with that choice. It was a silly choice. And a few weeks ago, I took profits in Drone Shield. I could say that was a mistake as well, but I bought back in. But I've put Drone Shield into my small cap portfolio. And the reason I did that is in my small cap portfolio and my quality portfolio, I don't really follow the performance in terms of charts of those companies because they're more of the longer term investments. So I put Drone Shield into my small cap portfolio, which means I won't be looking at the chart for that company all that often. Also bought AUB Group during the week after they released their results. Now the company issued an upgrade and the market was ho-hum about that upgrade. In fact, the share price went down a little bit. And I decided I think there is potential. The market is undervaluing this company right now. Now, I've always wanted to buy into this sector. So we're talking about AUB Group, Steadfast Insurance Brokers. There's another one, PSI Insurance, if I remember correctly. And I do think these companies are high quality companies. And to be honest with you, I'd rather buy these insurance brokers than any insurance company without question, without doubt, because there are some those insurance companies could be facing a lot of headwinds moving forward. Those headwinds won't be felt by insurance brokers. And the other company I actually bought, and I put AUB Group into my quality portfolio because I do think there is definitely an argument that AUB Group is a quality company. But my third purchase was Genus Plus. Now, I did trade Genus Plus about 3 or 4 months ago. And one of the mistakes I did made, Genus Plus is highly liquid. And one of the things I want to do in my technical analysis portfolio is not trade highly liquid companies. But Genus Plus is profitable. They are growing. I like the commentary within their announcement. They released their results. Share price actually did pop up after I sold. So I probably should have put Genus Plus into my small cap portfolio. But I just like the potential of this company moving forward. So I put Genus Plus into my small cap portfolio. So again, I don't really have to worry about the charts. Share price could drop 10% tomorrow, and I won't worry about that because this is more of a medium to long term position. And I just like the bullishness they had in their commentary. So these three companies, I put it into small cap and quality portfolios. Now on to the technical analysis trades I made during the week. And I made 4. I think I mentioned Swoop last week. The share price at Swoop had dropped down to whatever where I thought, this is looking interesting. Now, there is an argument that maybe Swoop belongs more in the small cap portfolio because I bought Swoop based off the share price dropping to 19 cents. So, yeah, possibly I should be putting Swoop into my small cap portfolio, but I will be following the share price movement of this company way more closely than other companies in that portfolio. Superloop broke out. I am calling it right now. Superloop broke out. This is one of the results I was waiting for because it did look like the share price was trying to break out and all it needed was some good financial results from the company. Now, I haven't delved deeply into the financial results. That's not the thing. It's about how the market reacts to the financial results. And we have seen a breakout. So I'll show you the chart for that company. I bought A2 Milk upon the release of their results. Did I do a video on A2 Milk? Can't remember. And that has worked out well. In fact, I bought an open. I don't usually do that. I usually wait, but I liked what I saw and read in their announcement, and I decided to buy on open. That was actually a pretty good decision. So even though at times it seems like I do rue my bad decisions, I should also acknowledge my good decision. This was a good decision buying A2 Milk on open. And the other company I bought was MA Offshore. And the simple reason I bought MA Offshore is really interesting trading on the day they released their results. Now, it's really interesting. I have now bought and sold MA Offshore twice. Actually, 3 times. Actually, no. I've bought MA Offshore 3 times in the past 2 years and sold it twice. So if you listen to some of the experts, I'm talking about Molly Fool, Andrew Page, and Scott Phillips, they will always tell you, never sell out of a company and take profits because you'll never buy back in. You would never buy back in. I don't have that problem. I recognize when I might make a mistake and I have no trouble buying back in. I've done that twice now with MA Offshore when I've sold, taken profits and the share price increased and then I bought back in. And I don't have that problem. So I think it's very important to understand your own personality, understand your weaknesses and strengths. And if you're the sort of person who will never buy back into a company that you've sold out, I think that could be an issue for you moving forward, particularly when it comes to technical analysis. So MMA Offshore, I've now have that again in my technical analysis portfolio. Now let's have a look at some charts of these companies that I do own in my technical analysis. And I've actually put in all these charts where I bought. And then I'm going to start with step one. I am really thinking about selling and taking profits in step one. And it's really interesting because someone questioned about compounding. They said, well, this is good, this technical analysis is good, but you don't get the effects of compounding over time. And I just thought about it and went, that's probably one of the most ridiculous statements I have ever heard. And I'll talk about step one and how you can use compounding to your benefit. So step one, share price has increased from 53 cents when I bought in late August last year, and share price now is $1.54. So share price has tripled in about, or just about 6 months. So just imagine I bought $10,000 worth of shares. Now that's worth of shares is now 30,000. Now, what I can do is take profits and then distribute that 30,000 to 3 other companies. Now, at this point in time, my success rate is about 70%. So we'll just assume it's 66%. So I buy 3 companies, $10,000 worth of shares in these 3 companies, and more than likely 2 of those companies will be successful trades. So I can turn those $10,000 into maybe 15,000 or 20,000. And then maybe 6 months later, I could turn that 15,000 or $20,000 and buy 2 other companies and trade those 2 other companies. So over time, you do get this compounding effect. And I think some investors believe to get the true effects of compounding, you need to own the one company for a long period of time. It's not true. Not true at all. So that's what I'm thinking right now with step one, that I can take the profits I've made with this company and put those profits into other companies, other trades, because I think there is potential that step one might be fully valued right now. According to TradingView, step one has a markup of $300 million. I think there is a little bit of excitement in the market around this company, maybe too much excitement. And the other thing is the 3-day candlestick does look fairly bearish. So possibly taking profits with step one over the next few days, even though I've only owned this company for 6 months. And that's the benefit of technical analysis. You can get these really strong increases in share price over a short period of time. And then you take the profits and put that money to better use. Because I don't think step one will double from here. I think it's going to be highly likely that step one doubles from here. What other companies will I show you? I don't want to go through all these. So we have Hub, Bravura. Okay, let's talk about Bravura, and this will also emphasize not being shy about buying into positions where you've already sold, and in that position or that company share price then increases. So this happened with Bravura. So I initially bought Bravura at 52 cents back in early July. Then I sold at 71 cents on a breakout, and this was actually a bad decision. I probably shouldn't have sold on that day. I probably should have bought more at 71 cents, but I just wanted to take profits because I was nervous. Share price rallied significantly on that one day. Share price then went sideways. And then the share price rallied to about 80 cents in late December. And then I bought back in 80 cents. So I sold at 71 cents and then bought back in 80 cents. And I'm really thankful I did that because the current share price is $1.24. So up over 50% on this position in about 2 months. So don't be shy about buying back into a company that you recently sold because it could be a really good decision. And Bravura Solutions shows exactly that. So Elders, Phoenix is an interesting one. That probably belongs more in my small cap because I don't really follow the share price of that company all that closely. Zip's interesting. So if we actually look at the 2-year chart here, you can just, actually maybe not the 2-year chart because, so you can definitely see a shift in sentiment in this company. It's so obvious. This is me just looking at volume and the share price trend and taking, combining the two, share price and volume. And this was a no-brainer. Bought at 55 cents when we started to see volume increase, and the volume has expanded since then. So a little bit of excitement in Zip at this point in time. Email payments, nah. Cobra, meh. Money Me's fairly similar possible setup to step one. I'm going to show you, go back to step one, by the way, because if you look and go back 2 years, so 2 years ago, start of 2022, massive amount of negative sentiment in this company. Negative sentiment in this company was extreme. And then what happened? The company released something really negative. What date was that? That was the 16th of May, 2022, when the share price dropped 56 cents. That was a low. And after that date, share price just went sideways. A long consolidation period that lasted, so May 2022 to August 2023. So it lasted 15 months. That is what I'm looking for. Long consolidation periods absolutely perfect when it comes to breakouts, because any shareholder who bought in during this downtrend because they thought, oh man, share price of this company has dropped 50%, it's cheap. During this consolidation period, they become bored and they will sell out at a loss. And then eventually, all those shareholders who bought at high prices, they've gone. They've left the shared registry. So there's very little resistance moving forward. Company releases some positive news in August last year, and that's why the share price has gone on a run. And those shareholders who bought 2 years ago during the downtrend are now probably kicking themselves. Probably wondering why they suck at investing. Another company I'm thinking of taking profits is Domino's Pizza. So I own Domino's Pizza in my, get rid of that 95.55 there. So Domino's Pizza is a company I do own in my quality portfolio, but I'm willing to trade any companies that I own in my quality and small cap portfolio. But the share price of Domino's Pizza rallied on their results. Not sure why, because even though I haven't closely looked at the results, it seems like the results were similar to the outlook statement they put out a few weeks ago when the share price dropped a fair bit. But the share price is now up over 10% from when I bought. And I'm always willing to take profits in these sort of setups when it's up 10%. So take profits in Domino's Pizzas potentially up 10%. We have Quantum Intellectual Property. That's a traditional breakout. Look at that. A couple of really good announcements from the company. Shape, another company I bought, a very similar setup to companies like Doug, Duratec from about 1 or 2 years ago. Cochlear, I bought this company on the release of their results at $308. Current share price is $343. So share price of this company is up over 10% since I bought, even more than 10% now. Polynovo, Electro Optics, IPG or IPD Group, ServiceStream. ServiceStream, this was an interesting one because I was becoming bored with this company. I was thinking, oh no, I should just sell this company because I'm becoming bored with it. And patience has been one of my weaknesses in the past. And fortunately, I just went, nah, I'm just gonna maintain it because you just see the share price not doing much at all, just creeping higher really slowly. So I bought 81 cents back in June of last year when there was a bit of a breakout, and the share price was creeping higher. And then the company released their results. Now, on first glance, the results were pretty good. I did like the results, and that's why the share price has rallied in the last 2 trading days up to $1.02. So very fortunate that I maintained my goal with this company, that I thought the trend was still up, even though it was trending slowly, the trend was still up. And I am always willing to maintain a position for a long period of time. ABB, which is Aussie Broadband, this was another breakout. You'll see very similar patterns when you look at the charts of all these companies. So I bought at 351. Now, this is another company that I own in my other portfolios. I think this is in my small cap portfolio. So I'm always willing to trade those companies, and they release their results. Massive volume coming in, which is also a good sign. And this was an upgrade. Fairly weak upgrade, but it was an upgrade. Doug. So this has been a stellar performer since I bought, and also since the start of financial year. But unlike Step 1, there is potential this company could run even further. Beautiful looking chart. So I bought at 83 cents back in February, well, 1 year ago. 1 year. So share price of this company has tripled in 1 year. So Step 1 tripled in 6 months. This has tripled in 1 year. But this is a beautiful chart for Doug. I don't think they've released their results at this point in time. Now, one of the reasons why my portfolio did actually drop on Friday was because of Duratec. So I bought Duratec at 55.5 cents in November 2022, another breakout, beautiful breakout. For some reason, the share price dropped 16%. Now, when I looked at the results look pretty good. So there is some underlying issue that the market saw in these results that I didn't. I bought 55 cents. This could be a sell. This could be a sell. Now, I didn't want to rush out and sell this on the day. So I did see the share price dropping, but I didn't see it drop to 16%. When I saw the share price, it was down about 6% at one point. So I thought, oh, what's happening here? And then I was a bit shocked to see it down 16%. So I just going to wait. This could be a reaction from the market. I don't know. I just don't know. COSOL, I have no idea. Bank of Queensland, I should be selling this. All the other banks seem to be on a run, but Bank of Queensland just doesn't want to go on a run. I wouldn't be surprised if this company started to go on a run just because it's being left behind by the other banks. DGL, Atlas Pearls is another company that maybe I should take profits. Bought at 5.7 cents. Current share price is 17.5 cents. So the share price of this company has tripled since I bought at September. Does look a pretty good chart. Share price has dipped the last 2 days, but we have seen a similar sort of setup twice previously. The share price has dipped, and that was a buying opportunity. Not a lot of volume in the dips the last 2 days, actually last 3 days. So when you see low volume when the share price dips, that's actually a pretty good sign, not a lot of selling. And when you see the volume rising, when the share price is rising, that's a really good sign. You see that with Atlas Pearls. Share price is rising on good volume, that falling on fairly weak volume. Catapult, Boral, A2 Milk. I'll talk about A2 Milk. So bought on open, 545. The share price now 586, so nearly up 10%. And again, this is a company I sold. So I owned this company for a long time. I sold back in August of last year, and I bought back in at a higher price. Stop the mentality that you can't buy a company when after you've sold out. That's silly mentality, in my opinion. Now onto the companies I bought during the week. Actually, I should put Judo up a little bit. For some reason, wasn't in this list. Yeah, I noticed that mistake. It wasn't in this watch list in TradingView. Anyway, let's have a look at the companies I bought during the week. Swoop, probably low conviction, but 18 cents is a good support level for this company, and I bought at 19 cents. So I just went, well, I'm not going to wait for that 1 cent drop. Share price is now 20 cents. They should be releasing the results in the next week. They did give us a date. I think it was the 27th or 28th. And I am hopeful because Aussie Broadband released really good results. Superloop released really good results. And Swoop is in the same sort of area. So I'm hoping we're going to see similar good results for Swoop. Now, I don't think the market thinks there's going to be good results because the share price is not increasing. But if it does, the share price of this company could go on a run. Now, this is a low conviction buy at this point in time, and it's just based off where the share price is now in relation to a support level. Superloop, much more conviction with this one. This is a classic breakout. Now, the reason why my thing is right there is because I think I was looking at the weekly chart when I put, here it is, the weekly chart. Okay. So share price, I've been following Superloop for a long time, and I've just been waiting for the turnaround, waiting for that inflection point of this company becoming profitable. Market cap is still $400 million, but that's just off the potential of this company moving forward. Share price reached a high of about $3.30 back in 2016. So this company's been around for a while and has been in a long-term downtrend. It looks like it's broken out of that downtrend, possibly, particularly if you do look at the daily chart. So let's have a look at the daily chart right now. So it looks like the company was trading in a range between about 74 cents and 57 cents. And before this breakout, and I knew the company was going to be releasing their results, I saw the share price trying to get above the top of the range, which was a good sign moving forward. So even if the company wasn't releasing the results, this could have been a trade because of a potential breakout. And then the company released the results and the share price increased almost 10% on the 22nd. And then a further 6% on the 26th. What date is today? 23rd. I was going to say 26, but it's the 23rd. So this is a traditional breakout. So what I mean by traditional breakout, and this may be Kneppy's definition of a traditional breakout, is I want to see the share price rally on good financial news, at least a 6-month high on increase of volume. So do we have that with Superloop? Yes. The share price has rallied on their results. Share price is now at a 6-month high. In fact, last time share price was this high was back in April 2022. So we're almost at a 2-year high. Increased volume. Yes, the last 2 days, much higher volume. So we have the definition of my breakout, and the chances of the share price of this company rallying from here even further is, in my opinion, fairly high. So I bought at about 80 cents. What was it? What did I buy at? 80.5 cents? No, 80 cents. And this was another instance where I bought on the day. So I didn't buy at the low of the day or the open, but I bought at 80 cents. I put a bid in 80 cents. And lastly, we have MMA Offshore. For this one, it's necessary to go all the way back. So I initially bought this company at about 50 cents in February 2022. So 2 years ago. So share price of this company has rallied from 50 cents to $2. So quadrupled it in share price in 2 years. And as I mentioned before, I've taken profits twice and I bought back in twice. And my recent buy was $1.95. Now, sometimes I'll tell you that I don't really look at the market when it's open. That's not always true. Sometimes I will follow some companies a little bit more closely during trading, and MA Offshore was one of those companies. I saw the results and went, it's going to be interesting to see how the market reacts. And to see how the market reacted on the day, let's have a look at the 5-minute chart because it is really intriguing. I don't know what happened. So the share price of this company opened up fairly strongly, almost 10%. Share price went up to a high of $2.25. And then we saw some selling. And the share price went from $2.25 all the way down to $1.92. So the share price dropped by, what's that, 30%? That's 15% in about 2 or so hours. And when I saw the share price drop below $2, I became interested. And that's when I took a position at, what was it, $1.95. Where did it go? Where did my little thingy go? There it is. I don't know why it disappeared in the 5-minute chart. So I took a position in this company during the day at $1.95. And the share price has rallied nicely up to $2.07. I'm not sure why there was a little bit of selling in the day. It could have been just one institution stumping on market. I don't know. But it was good results. And the company is still releasing positive financial news, keeps on releasing upgrades, that sort of thing. And one of the things I did read in their announcement is the diversification of their revenue. And this was a problem of this company back about 4 or 5 years ago. So if we go to the weekly chart, you'll notice the share price took a massive dive back in 2013, 2014. Share price went to a high of $24. I don't think it was $24. There could have been some sort of share, what do you call it? Share recapitalization, what do you call it? And so there might be more shares on issue now than back then. You can see a massive dive in the share price. And one of the reasons for this dive in the share price was because of lack of diversification in their revenue, and they're really dependent on the oil and gas industry. They're much less dependent on that industry right now. So I think that's one of the changes management have made over the years. It's just the share price dived and hasn't really recovered back up to those levels. Significant increase in shares on issue, by the way. But beautiful chart when you actually look at that beautiful looking chart. And increase in volume. That's the other thing. Look at that massive increase in volume over the past few years. And that's a good sign moving forward. In fact, the last week, the volume was the highest we have seen since 2021. Okay, so a pretty good looking chart. Company's market cap at 743 million. Now, I'll delve a little bit deeper into their results, but this is just me just seeing the share price drop or plunge for a brief period of time. And I'm not sure what happened there. And this was just me being, I suppose, opportunistic. That's probably the best word, opportunistic trade. And I'll be willing to take profits in this company again and then probably ruin that decision a few weeks later. So that's all I'm going to talk about in today's video. If you have any questions, any thoughts, just leave those in the comment section of this video. My learning in technical analysis keeps on going. I currently am reading 3 books on technical analysis, and I am learning a fair bit. And the good thing about these 3 books is they talk a lot about volume and what to look in regards to volume. A lot of the other technical analysis books I've read in the past don't really focus on volume. They're looking at patterns, that sort of thing, but they don't focus on volume. And I think volume is really important. Maybe if I was doing a textbook, I'd probably be focusing on a volume and share price and volume, maybe not interacting, but coinciding with each other, just like MMA offshore. Anyway, so have a good day. And don't forget, I am not a technical analysis person. I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.